Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve problem sum based on cash flow statement under the subject FRA. Again, a very important video for all the TYBBI Sem V student. In this video, we are going to take up one problem sum based on cash flow. And before that, we will be first noting down the format and the rules and the procedures for that particular format. Okay, what all things come under each headings, all that will be discussed in this video. Thereafter, multiple videos will be posted on cash flow where we will be covering up much more in depth all the problem sum based on cash flow. Chalo, so let us see first the format and the rules regarding cash flow, and then we will be solving one sum based on cash flow statement. Okay, now let us discuss the format to solve the cash flow statement. Now remember, there are certain categories which you need to understand which are a part of cash flow. Okay, the very first thing is always cash flow from operating activity. Under this, so this is like your main heading. Under that, we start with number one, net profit or loss. Second, adjust non-cash non-cash items, investment and finance related to non-cash. Third, adjust working capital. Okay, so when you add the net profit or the loss with your adjusted non-cash item plus all your adjusted working capital, we will get cash generated from operating activity less tax gives you cash from operating activity. So that's the first part, cash flow from operating activity. Second, cash flow from investing activity. And third, we have cash flow from financing activity. When you take up all the totals of all the headers, we'll get either net increase or decrease in cash. You add the opening balance and you will get the closing balance. The closing balance and opening balance are always given in the question. You have to just see that it tallies with the amount whichever they are giving you in the question. Now, remember what all things usually come in each of the headings. First, net profit, that will be directly given in the question. Under adjust non-cash items, remember it is all those items which are not related to cash from your P&L account, your profit and loss account. So the rule you have to remember here is all the debits of P&L account, whatever comes on the debit side, or those are all the expenses which are there, debit all expenses, you need to add them. Okay, credit will be all your income and which you need to less. So remember, under adjust non-cash items, all the itineraries which are related to P&L account appear. All your expenses or the debits of all your accounts will be added and all your income, that is the credits, will be less. Next is under adjust working capital. Remember the code LAL, L-A-A-L. Okay, you need to add increase in liability, decrease in asset, increase, and you need to less increase in asset and decrease in liability. Remember the word LAL, L-A-A-L. Okay, now under adjust working capital, when we talk about liability, asset, liability, we are talking about current assets and current liabilities. Remember, whenever you have a sum based on working cash flow, this is the very first thing that you need to solve. The one of the most easiest thing that is there in this, you need to solve. First, always start with working capital ka solving. Okay, second, you need to note down the opening balances and closing balances of the cash which will be given in the question. Okay, after that, next step will be solve your adjustments. Whichever adjustments are there in the question, go through them. If those adjustments pertain to any values from the balance sheet which they have given you, prepare a ledger account, tally it, whatever difference you get, one has to come in your P&L part, the other one will be either in operating, either in investing or either in finance. Okay, after that, check your fixed assets. After we finish all those, okay, first the working capital, then the balances and the adjustment, then we take up all the random accounts. Under cash investment or cash flow from investing activity, remember we only talk about asset, fixed assets. Okay, we only talk about fixed asset. If you're purchasing any asset, we less. If you sell any asset, we will add. Remember, cash flow is only dealing with cash item. So money going out will be less, money coming in will be add. Similarly, if under financial activities are related to your equity shares, your preference shares, and your debentures. Okay, again, whenever you issue them, money is coming in, so we add. Whenever you're redeeming them, whenever you're paying anything to them, okay, money is going out, we will less them. Okay, so this is like the basic setup of your entire cash flow. Cash from operating activity, cash from investing activity, cash from financial activity. Those are the three main headers. Under operating, you have adjust non-cash item, adjust working capital, and less tax. Okay, chalo, I hope everyone have got a basic idea about what are the things that are required to be noted down in your cash flow, and what are the things which will appear in those particular headers. Okay, all your P&L items, all your working capital, that is CN, current asset and current liabilities, all your fixed asset related stuff, and all your liabilities, that is your equity, preference and debenture related activities. Okay, now based on the same funda, now let us see how we will take about to solve the sum. We'll take up one sum. Now in this video we are going to solve one single sum based on cash flow. Later on more videos will be noted down, okay, will be uploaded where multiple number of sums and multiple sums with the various adjustment will be taken into consideration. This sum is basically just to understand how you need to plot, what all things you need to plot and how you need to plot them. Okay, chalo, let us see the very first sum based on cash flow statement. Okay, we read the question as Telesta Limited gives you the following information based on the balance sheet for the year ending 31st March 2013 to 14. Prepare cash flow statement for those years for the year 2014. They're giving you liabilities 20 if you can do 2013 2014, asset 2013 and 14 has been given. They're giving you various liability, various asset. There is only one correction on the asset side. Under bank balance, the opening balance is 15840, that is 15,840. Okay, other information given now, the company has paid interim dividend, preference shares were redeemed, and income tax is paid. Okay, all those adjustments are given. Now we will follow our rule of solving the sum. That was first step was we note down the working capital, second we note down the balances, third we will take up the adjustment, fourth we will note down all the various items which are there in the question. Okay, so based on that same procedure we will be solving the sum. So let us see how we start. Okay, first under working capital, now remember the rules for working capital which we had done before, that we follow the rule LAAL, increase in liability, decrease in asset will be add, increase in asset, decrease in liability will be less. Okay, so based on this funda we are going to solve the sum. Okay, now if you look into the question, let us try to find out which are the current assets which are available. So on the asset side, land is a fixed asset, building is a fixed asset, stock is a current asset. So yes, now stock, it was 27,000 and it has become 36,300. Okay, it was 27 and it is becoming to it turned up to 36,300. So now there is a increase in asset. So 27,000 minus 36,300, we get the difference as 9,300. Now remember the logic. Okay, remember the part. LA, when increase in liability and decrease in asset was supposed to be add. Increase in asset. Okay, so what I'll do here is I'll just note down add. Under add, remember in pencil, I'm just noting it down. We have increase in liability, decrease in asset. Again, little bottom here I will. Okay, now wait. This is adjust cash. Here is the adjust working capital, so I'll note down here. Add. In pencil, we'll note down here increase in liability, decrease in asset. Okay, and I'll leave down there and note down here as less, increase in asset and decrease in liability. Okay, so we'll start now. Stock was increased. Okay, stock has increased, so I'll just cancel this part. This part has nothing to do with the sum. Okay, let's see. Stock has increased from 27 to 36,300, so there's an increase of 9,300. So Since there's an increase in asset, it will come on the less. So I'll write here increase in stock, and it comes on the less, so it will become 9,300 negative. Next, debtors. Yes, debtors is a current asset. It was 40,440 and it became 38,460. So there's a decrease. Okay, if there is a decrease, it will come on the the add side, decrease in assets. So I'll write here decrease in debtors. The difference is 40,440 minus 38,460. The difference you get is 1980. So that will be plus 1980. Next, we have prepaid expense. Yes, that's a current asset. 25,880 it was and it became 17,000. So again, there's a decrease in prepaid. So if there's a decrease in asset, it comes on the add side. So add decrease in prepaid expenses. It was 25,880. It became 17,000. So there's a difference of 8,880. Okay. Next, we have bank balance. The bank balance will come later on here on this side. We'll see later on that. Miscellaneous expenditure is fictitious, is not a current asset. Ignore. So all the current assets has been taken into care. Now we jump to the liability side. We'll jump to the liability side and check what are the current liabilities. I can see creditors number 1. So creditors were 3,37,920 and it became 3,81,990. So there's an increase in liability. So increase in liability is usually add. So I'll note down here add increase in creditors. Now the difference, okay, 337,920 minus 381,990. The difference that you all should get is 44,070. Okay. Next, check. Let's see if any other liabilities are. Then a provision for tax is not to be considered under current liability. Profit and loss will come at the start. You'll see that later on. General reserve again is not a part of current assets or current liability. We ignore it right now. Equity share and preference share will usually come under the financial part. So we'll see that later on. So that's it. Nothing else is available. So what we do here is we'll just take the total now. So it was 1980 plus 8880. We have negative 9,300 and 44,070. Okay, that's working capital ka values that we have noted down. Okay, so right now just keep it as it is. Now we jump to the next part. That was so first part where we had to solve is working capital is done. Second, we note down the opening and closing balances of your cash. On the asset side is given bank balance 15,840. Okay, that's the opening balance and 3,240 is the closing balance. So under opening balance, now they've only given you bank balance. Okay, so we note down. So there is no cash balance. They're giving you only bank balance 15,840. So outer column also I write same thing 15. Now the opening part we will keep it till here because we need to note down the ending part. And closing balance they are given you 3,240. Okay, so like the opening and closing part is there, so I'll just note down this 840. Closing, so this is once I get this, the final answer in this, there's no cash balance. Okay, there's only bank. So remember the final answer has to be 3,240 instead. The answer is already given in the question. You just have to bring it to the same value. Okay, so step number 1, adjust working capital. We noted down. Second step, we need to note down the opening and closing balance of the cash. That all is done. Now third, the most crucial one, we will start going through the adjustment one by one and trying to figure out where we need to put those accounts. Okay, so we'll read one by one adjustment. Remember, if the adjustment is a part of the question, like from the balance sheet we are talking about any adjustment, we will create a ledger account for it, like a working note. If that adjustment has nothing to do with the question, then we will only pass the journal entry, and based on the journal entry we'll see whether money is coming in or money going out, and according to that we will be making the or posting the entries. Okay, chalo. The very first adjustment, the company had paid interim dividend of rupees 5% on equity share. The very first adjustment. Okay, if you look at the first adjustment, it is given that the company has paid interim dividend of 5% on equity share. Now, interim dividend, if you look in the question, is not available. So we will directly pass a journal entry for it. Okay. Okay, so we will remove now 5% on equity share. So see, there is not a single statement in the question given on interim dividend like on the asset and liability. So see how we do, how we will solve when such kind of adjustments are given which is not a part of the question. So remember, we will only pass a journal entry for it. So interim dividend was paid. So if I'm paying, cash is going out. Okay, if I'm paying, the money is going out, so it will become to cash. Okay, and for what I'm paying for interim dividend. So my entry would be interim dividend account debit to cash. Now it is 5% on equity share. Equity share is 1,20,000. Okay, interim dividend to cash. And in the question it is given that equity shares are 1,20,000. So 1,20,000 ka 5% is 6,000. So my journal entry would be interim dividend account debit to cash 6,000. Now again, it is an expenditure for me. First effect. So there will be two effects of this. First, it is an expenditure for me according to the rule of non-cash expenses or non-cash items. All my expenses, now whenever I'm paid dividend, it's an expense, it comes in P&L account. If it comes in P&L on the debit side, the rule is all the expenses we need to add. So I'll write under add interim dividend paid. The amount came to 6,000. So we are noting down 6,000. That's the first effect. Now interim dividend is a part we are paying to the equity shareholder. Equity shareholder are a part of financial activity. So whenever we pay dividend, money is going out. So here it will be less interim dividend paid. And it's less, so negative 6,000. Okay, so this was very important. So that adjustment didn't have interim dividend was not present in the question. So we had to pass a journal entry, and based on the journal entry, we came to know that interim dividend is an expense. So it will get added in non-cash item, and money is going out. So from financial activity, it will be paid out. Okay, chalo, that was the first adjustment. Second, preference shares were redeemed during the year at 10% premium. Now preference shares are given in the question. Okay, preference shares are given in the question. So again we come with the rough note. Okay, preference share is given 90,000 and 60,000. So what we'll do is we just create a rough working note. Okay, preference shareholders ka preference shares ka opening balance, liabilities opening will be on the credit side, and closing balance they are given you as 60,000. So opening was 90, closing is 60. So there is a reduction in the value. From 90 it becomes 60. It means 30,000 we have redeemed. Okay, if we have redeemed, it means that money is gone. We have to pay the preference shareholders. Okay, and it is given in the adjustment that the preference shareholders were redeemed during the year at a premium of 10%. So of this, I'm even paying them 10% extra. So if I have to pass journal entry for this, the entry would be preference share capital account debit. 30,000 preference shares are redeemed because we came to know from 90 it became 60, so 30 is redeemed. We are going to pay them security premium because I'm going to pay them premium pay. Okay, of 10%. So 30,000 ka 10% is 3,000. I'm going to make a payment. I'm going to redeem as a payment, so to cash account. So 33,000 ka payment we have made. Okay, so now look here very carefully. 33,000 ka money is going out. Preference shareholder has been reduced by 30, and 3,000 ka premium I need to pay extra. So if I need to pay extra, this is an expense for me, and this is the money which is going out. Expense, money going out. These two entries we'll have to post in our sum. So the premium that we are going to pay to the redemption. So already a premium is an expense. Expense are debit. Debit we add. So add premium on redemption of debentures. of preference shares. The amount came to 3,000 because 30,000 ka 10% was 3,000. First effect. Second effect, money is going out because I'm going to pay the preference shareholder along with the premium. So less redemption of preference share. So it's going to be 30,000 plus the 3,000, total 33,000 ka payment was, the cash has been gone, so we have made a payment of 33,000 in total. Okay, so 30,000 was the decrease in the value and 3,000 the extra which we have paid. Okay, so whichever adjustments, direct adjustments are there, nothing to do with the balance sheet, we pass the journal entry and we make the statement. If the name appears in the balance sheet, we create an account and we try to see what difference is available there. Okay, chalo, third adjustment, income tax paid during the year is 15,000. Now income tax paid is given and they are giving you even provision for tax. So we will again create a small rough note or working note. So provision for tax. Opening balance given is 17,000. Again liabilities on this side. And closing balance given is 8,000. Okay. And now they are told that income tax is going to be paid. So income tax has been paid. So how much amount has been paid? 15,000 has been paid. So money going out. So we write it to cash. See, if I'm paying income tax, my entry would be income tax or provision for tax account debit to cash. So cash is to cash 15,000. When we tally this account, okay, 15 plus 8 becomes 23,000. 23,000 minus 17 is 6,000. This 6,000 will become provision, the new provision for the current year. Provision for tax is 6,000. Again, this is the amount which I'll have to pay. Okay, again, if I have to pay provision for tax, if I have to pay, it will be my expense. Expense will come on the debit side of the P&L account. So we will pass 6,000, number one, and the amount which you have already paid, 15,000, that will come under income tax. So remember here in the question, this particular adjustment read out as income tax is paid. Now they can ask you two ways. They can tell you income tax is paid, and the other way they can tell you income tax provision is made. So remember, if income tax is paid, provision will be the balancing figure will be provision, and if provision is given, the balance will be the income tax paid. So these two are very important concepts in this. Okay, so provision is of 6,000, income tax paid is 15,000. Let us see how we post that into the account. It's an expense, so we'll write here provision for tax, balancing figure was 6,000. Okay, and income tax paid, less tax, 15,000. Okay, so two very important things. So adjustment number one was interim dividend, we cleared that. Preference share redeem cleared, income tax cleared. All the adjustments are cleared. So now we will jump to one by one stating the remaining accounts. Okay, we always start with the asset side. First, land. Land is a fixed asset, meaning it has to do something with the investing activity. It was 2,10,000, it became 2,70,000. Okay, now remember one thing in investing activity, when we compare the 2 years ka fixed asset. So if it is like the first year was lesser value and the second year becomes higher. Remember, if there is an increase in the value, it will always be that you're purchasing any asset. But when the value reduces, the first assumption will always be made that it is a depreciation and it will appear in your non-cash expenses. But if in the adjustment they have already given you depreciation, then it will be sale of asset. Okay, remember, if the value increases, it is purchase. When the value decreases, first assumption is depreciation. If depreciation is already given in the question, then it will be sale of asset. Okay, so land, it was 2,10,000. Okay, and it became 2,70,000. So 60,000 has increased. If there is an increase, okay, money is going increase. Matlab I purchase, and the moment we purchase, money is going out. So less purchase of land, 60,000. Okay, similarly buildings is again a fixed asset, 2,85,000, and it became 2 lakhs. If you look at it was 2 lakh 85, it became 2 lakh 70. So there's a decrease in asset. There are no adjustment given on depreciation, so we have to first assume that the decrease in fixed asset is because of depreciation. So we'll write here depreciation expense, so we add. So dep on building from 2 lakh 85 became 2 lakh 70, so 15,000 it has reduced. So 15,000 ka depreciation. Okay. Next, stock, we have already considered that, prepaid, consider bank balance, consider miscellaneous expenditure. Now miscellaneous expenditure was 6,000, it became 5,400, so there's a written off, decrease. Okay, it's a written off, it's an expenditure. So suppose now if you do not understand ki whether we need to add or less, just remember this step, okay? Make a small working note for yourself. So this miscellaneous expense, it's an asset side. So opening balance is on the debit side, which is 6,000. Closing is on the credit side, 5,400. Difference is 600, which is on the credit side. It's on the credit side. So remember, if it is on the credit in P&L, it will become on the debit. Debit we add, debit all our expenses. So written off. So we'll note down. This is miscellaneous expenses. So I'll write miscellaneous expenses written off. Amount is 600. Okay, so all the asset side have been taken care of. Now we come to the liability side. First is equity share. It was 1 lakh 20, it is 1 lakh 20. So there's no difference. We do not, so no entry to be passed on that. Preference share working is already done because we have already tallied the account and we have noted down all those values. So that's done. General reserve. It was 30,000 and it became 42,330. Again, remember general reserve will usually come in your non-cash mein. But again, we'll check GR. General reserve is a liability, so opening balance was 30,000 and the closing balance was 42,330. So there's an increase, okay, there's an increase. So the difference is 12,330. So 12,330, that's an increase, okay? You have increased more. If you have increased, it's an expenditure. Okay, this is a liability. So liability ka, the logic becomes different. Okay, liability, debit will remain debit, credit will remain credit. Asset ka, credit becomes debit and debit becomes credit, okay? So 12,330 has increased. So we will note down here general reserve, or we can use the word general reserve transfer. We have transferred money more into general reserve, and always the difference will be taken into add. So 12,330. So if there is an increase in GR ka value, it will be add. If there is a decrease in GR ka value, we will less it. Okay, general reserve is done. P&L, yes, that is important. P&L ka amount is given 15,240 and 28,000. Now always remember, net profit will always be closing balance minus the opening balance. Okay. So 28,080 minus 15,240, the difference will come to 12,840. Okay, after that we had provision for tax already taken care of, creditors taken care of. So all the posting has been done. So we just have to now do the filling up job. Okay, so first we will take the total of adjust non-cash. So there was no less here, so only all positive amount. 6 plus 3, 9, 15, 30, 36, 46, 48,000, 46, 36, 40, no, there's 600. So it will become 30, 30, 42,000, 42,930. Okay, and it is positive value. Now, this amount, so now we just take the care of this. So on the calculator, 1980 plus 8880 plus 44070, that is this value, minus 9,300, which comes to 45,000 is, and it is still positive. Okay, so I'm writing here 45,630. So now we add cash from the net profit, from non-cash item, from working capital adjustment. So we add up plus 42930 plus 12840. We get the value as 1,01,400. So that is cash generated from operations, 1,01,400. From that, less income tax, we subtract 15,000 and we get 86,400. Now, from cash flow from investing, there was only one item, so it will be negative 60,000 in the outer column. From cash flow from financial activity, there were two things, 33 and 36,000 negative, so it will become negative 39,000 on the outer column. So from 86,400 on the calculator again, 86,400 minus 6,000, sorry, it is 60,000 minus 39,000, we get a decrease. We got a negative value of 12,600. So net increase, in this case it will be net decrease in cash, that is negative 12,600. From negative 12,600, we add opening balance, that is 15,840. So we got the difference of 3,240, which matches with our closing balance. So this is how we had to basically solve the sum on cash flow. So this was the first sum that we have taken up in the video series based on cash flow statement. I hope everyone have understood this. Okay, so we started off with the format, the rules, where what things come, and then we have taken up one sum to understand where we need to, how we need to use those particular rules. Okay, remember all the P&L stuff, all the current asset, current liability, all the fixed asset, all the financial activities, the opening and the closing and the net profit. With that, the cash flow statement comes to an end. Okay, I hope everyone have understood the first video on cash flow. Chalo, with that, we will be ending this video here. Thank you.